yesterday, Steve, if I can just quickly recap, we saw the Nairobi market under pressure, down 0.4% according to my figures here. But interestingly, we had interest into counters in specific, particularly that I want to talk about, Kenya Commercial Bank as well as Equities Bank. Now, why would foreigners be looking at those two particular banks at a time when we've got the central bank raising interest rates and at the same time pressuring banks to lower their interest rates?
Well, you know, what's happening is that foreign investors are focusing mainly on half-year results, which will be expected in the next month. So they're expecting increased returns from such counters, especially banks. Mainly what would be driving their earnings growth is what you call forex income. They've suffered a bit on the fixed income side because of rates edging upwards. So you've seen most of the banks moving their securities from trading to hold to maturities, just so as not to negatively impact their earnings. So foreigners are taking positions early before their prices start edging upwards.
Ahead of the results, what sort of expectations do we have for those results?
Well, of course, not as impressive as last year, because this year has been quite tough in terms of, one, inflation, two, we've also seen interest rates going up. That's affecting the trade, the securities portfolio for the banks. But at the same time, banks are suffering liquidity issues because you're finding that most of the account holders are pulling their money away either to more attractive investments, probably to competing banks which are giving them higher yields, or to competing investments that are also giving better returns.
So would you be looking at the banks yourself now? What's your recommendation on the banking sector as a whole?
Well, banks are unique in terms of they're able to make money both in a recessionary and a bullish environment. It's just the magnitude that changes. And with most of them looking at focusing on reducing their cost-to-income ratios, they're focusing on leveraging on IT. You find most of the banks like KCB, what they're doing, having engaged McKinsey and company to restructure it in terms of addressing their HR concerns. You find that they're still able to have a positive return. It's just that the magnitude will be lower than last year's.
Yeah, one of the star performers of the Nairobi market in the past couple of weeks has been Kenol Kobil. That stock, many speculating part of the reason why we're seeing it rising so much is because of the drive that it is taking into the regional markets. It's expanding across Southern Africa. It's expanding in East Africa. What's your take?
Kenol Kobil is basically telling the people that they want to take advantage of the exit of the multinationals. For example, we've had so many of the multinationals, Shell, Caltex, exiting the downstream end of the business. And Kenol Kobil is taking advantage of that, positioning itself early in advance, and also looking at markets such as Southern Sudan, looking at Uganda, for example. And you see, one advantage that they'll be getting from Uganda is the fact that as at the point in time when oil now becomes, they start exploring oil, then they want to be the first, and in terms of also having the necessary resources to ensure that they can distribute and make some good returns out of it.
So what are you guys doing with that stock now? Are you still buying it?
We still recommend a buy on Kenol Kobil.
And in terms of the overall market, where would you be putting your money now, and what would you be taking off the table? But of course, without asking you to give us the specifics.
Well, of course, currently what is showing limited upside are the agricultural stocks, especially because of the current inflationary environment with food prices going upwards. The weather picture not looking too positive. At the same time, there's a focus more also on the utilities and basically non-cyclical stocks, because you're finding a situation where with the yield curve flattening and sort of going in a downward direction, those are indications of a recessionary environment approaching.
Yeah, I was just looking at your report now, and I see yesterday amongst the big decliners was Unga Group, as well as Athi River Mining, Uchumi Supermarket, East African Cables, and Total Kenya. All those stocks down more than 4%. Would you say there's any stocks amongst that group that's been oversold?
I think a stock like Athi River Mining and Uchumi, for example, have been oversold. I think these are buy signals. I mean, for Athi River Mining, basically looking at what's happening in the construction industry, though with the competition increasing, but Athi River has been able to diversify its portfolio and also enhance efficiency in its operating systems. Yeah. And Uchumi also, why I think it's still a buy, it's for the simple reason that its competitors have continued to thrive in its industry, and Uchumi, having come out of the woods, still has a great opportunity to spread its wings and be able to enhance return for its shareholders.
Yeah. Now, of course, the big excitement in the Nairobi market is the two upcoming IPOs. Next week, we've got TransCentury, and we also have British American Investment coming to the market next week. What's your take on the two? Would you have a choice between the two?
Well,
or are you buying both?
Of course, I'd recommend a buy for both because, sorry.
Now go ahead, I can hear you.
Yeah, what's happening, I mean, they present very unique and very independent investment opportunities because you're finding TransCentury, an infrastructure company across the region, exciting opportunities in the transport sector, having RVR, Rift Valley Railways, in its portfolio. We've seen congestion at the port and a lot of demand for efficient ways of moving goods across the region, and that will bring in very attractive returns. British American, on the other hand, there's also interesting opportunities in the region. Part of the funds that they're raising is for expansion, and there are a lot of opportunities with the Southern Sudan coming into play, Uganda and also Tanzania. Especially for them in the asset management division, there's a lot of scope to expand. So definitely those are good buy recommendations.